The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go. And of course, I want to welcome Steve back from a well-deserved vacation this week. Of course, he was up in the in Nantucket, and I'm kind of a little depressed, I have to tell you, because I was talking to Steve earlier. And if you go to Nantucket, isn't there one thing that you should come back with? I didn't ask for a T-shirt, didn't ask for a mug that said Nantucket. I mean, if you go to the ground zero of limericks, shouldn't you bring a snappy limerick back for me? Well, he didn't. No limericks, no jokes, no nothing. That's kind of like going to Mecca and not getting a crayon. Kind of going like Jerusalem and not trying to find out where the baby Jesus was born. Just one limerick. That's all I ask, Steve. Just one limerick a day. Anyway, we will be moving along. Maybe somebody else has great limericks in the den. I'll try to soldier on through in the meantime. And, a lot of stuff going on in the marketplace, but I spent a lot of time over the weekend looking at options and how everybody was selling options into the market. And to me, it was much more of a issue that looks like they think that they have this market fairly well locked now into this weekend. And, we had a push down. We're getting a second one down here. Got down to 1965 on the S&P cash. We're 1975 right now. Volume has dramatically decreased since all of last week. We're only at a little over 2 billion shares as we start the show today. I suspect that we'll be losing probably 200 million or 300 million shares a day every day this week as we go into Friday. For technology, it's a very quiet week. Of course, kind of the end of the summer. And if you're in the Silicon Valley, San Francisco area, it seems like the one thing to do if you're in technology is take off and go to Burning Man and be out there and kind of try to relive those days of hippiedom by swearing off technology and swearing off cash. I think the only thing you can buy out there is water. I think the only thing, water and ice maybe, but you have to barter for everything else. And a lot tougher. But that means there isn't a lot of technology news. And, of course, a lot of it came out over this weekend, or it was quietly coming out this weekend. We're going to talk about that. Some more stuff out of Nassim Taleb that I think is kind of interesting. But let's get this party started.
Then it's all just a little bit of history repeating.
On this day in 2000, no, it's not in 2000, it's 1998. Somebody did something wrong. I think that somebody was me. 1998. The Dow on 1998, the Dow Jones Industrial Average today lost 512.61 points. Its second worst point drop ever, but not even the top 20 if you decide to look at it by percentage, which I think is the way you should, but still a bad day. The front page of the New York Stock screams, "Kiss your assets goodbye." And by the year end, the Dow is 21.8% higher. Boy, is this history repeating once again? I almost feel like I got to play my history repeating once again. There's an echo chamber in here. Anyway, it's a quiet week. We got a lot of people on vacation, a lot of games going on, but my guess is these games all have to do with short covering. We've seen that in crude today with a big move in crude, and we will continue to talk about that and other things as the show unfolds today. I had it all folded up nice and neatly, but we're going to unfold it for just you. Oh, somebody's ready with a visual effect.
That it's all just a little bit of history repeating.
I'll have to check that out. I can't see that here. Maybe they can tell me what the visual effect was. Anyway, so a big deal out here. A lot of times headlines, especially in newspapers, get it 100% wrong, but not always. I was actually writing a little bit about that today. It's going to be in the Tech Insider this week. Kind of the Sports Illustrated curse that all the people that are supposed to be the best new athletes ever come out, and of course they're 20 years old, they get on the front page of Sports Illustrated and pretty much disintegrate fairly quickly. But I don't know, do they still put people on Sports Illustrated? It's not something I read. The swimsuit edition it is, but not the rest of it. But I do digress. Of things that are very interested out here, or I'm interested in, is the numbers are in, at least for last week, for Nassim Taleb, or as he says, Nassim Nicholas Taleb. His book has been instrumental in a lot of what I've been doing and figuring out how to make plays that are asymmetrical bets in the market. Of course, he's basically got a trilogy of risk-taking, but of course he spends most of his money on way out of the money puts and calls that never will go and get exercised. But, he may put a few million, 10 million a month away, and every 2 or 3 years he'll rake it in. For a fund that controls $3 billion worth of money, it went to $4 billion last week on just one decent week of options going out of the norm. And a lot of people, it's in his book, but he talks about Jim, I'm trying to remember, Jim, the biker, Jim. I'll think of his name in a second. Yeah, it is interesting. Anyway, he talks about him talking about the fact that 85% of all options go unexpired. And of course, it's meaningless if you don't figure out what happened to the other 15%. If you make 1,000 times your money on the other 15%, sounds to me like a pretty good bet. Option market makers don't always make money. About 85% of the time they do. And if you are on the right side of options, if you get a huge move like we did, hedge funds like him could clean up in a big way, which he did this last week. But anyway, he's more of, he basically put together a model to do all this. He writes a lot of books now, hangs out at colleges, just reaps in the money from his hedge fund, which I think is based out of Miami now. But I don't know why they moved, but they did. But he had this to say, which I thought was very interesting. He was very upset about the way that the news was reported last week. I'll just play the little clip here of what he had to say.
Universal colleagues, people I work with, and I've been doing tail hedging for 17 years. And in 17 years, I've never seen as much excitement over nothing. Never. And let me give you a piece of statistic. People say, oh, we're below the high. 99.9% of the time, the market will be below the high. And between 50 and 80% of the time, it will be like 7% below the high. So there's nothing absolutely abnormal in this.
Anyway, I won't play the whole thing, but he goes into, there's a few things that maybe even counteract what he just said. But I think what he was more interested in is the end of the world discussions that you normally see on CNBC or the front page of magazines, that the end is nigh. Generally, those are pretty good signs that at least you've got a temporary low in, and I think we kind of saw that last week. But normally he's not that nice. Normally he likes to find, especially economists that think that they know anything, and tear them to shreds because, granted, he's probably at least 10 times smarter than most economists. They don't know that they're fooling themselves. He's done the work to actually prove that they are very bad at forecasting just about everything. So we kind of went nice on the reporter from CNBC, who I don't think she claims to know anything. She was just asking questions. If you actually make a statement that is patently false, he will crucify you and make you wish you never had lived. He's actually fairly famous now for starting Twitter wars with all kinds of people like Steve Leisman and other people that think that they have any real idea about market work. But very interesting to see his idea about what is important, what is not important. And I think he was really upset that they were all yelling and screaming that they were 10% off the highs, like that was something that never really happened, when it is almost always what always is happening. In fact, we spend less than 1% of the time in the last 200 years of recorded history with markets anywhere within 0.5% of the high. In fact, the outlier was that we were up at the highs, or up at previous highs, for so long, and so close to those highs was the outlier, not the fact that we're down lower, which is a great amount of the time. Anyway, I thought it was very interesting. But you can always read his books. I recommend them highly. There's Damn Lies and Statistics. Of course, we played that clip. China's free speech, which is kind of interesting, seeing what's going on in China. They arrested 170 or 195 people over the weekend. There's not a lot of free speech over there, but one of the most interesting persons that was arrested for tweeting out there was a gentleman that reported the guy that jumped out of a building because of the stock market collapse in China. Apparently, it was true, but it did not really matter to the Chinese. They didn't like this man running around causing any hysteria. There's a lot of other things that are actually people that were reporting things that were not true, like inflated numbers of the explosion in the blast that burnt down that whole section of town. I think it was about a fourth of what this gentleman said. But kind of interesting that if you are kind of a citizen reporter in China and they don't either like what you say or you get it wrong, they are more than willing to throw you in jail, which probably continues to say and show what freedom is truly like in China. But I thought that was interesting. Also, this is the time to start watching for data dumps going into the weekend. Probably not going to have enough time. We'll handle it on the other side. Netflix did a 10Q into Friday, and it says something very different about their business that I think a lot of people are out there looking at today. Netflix is off a little bit. We'll talk about what that is and shades of Enron. Probably not outright fraud. Troubling nonetheless. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back again. If you're new to my show, haven't listened for the last few years, there's a thing called a data dump. And if you're a lawyer or a politician, or you're on Wall Street and you want to basically dump a bunch of stuff when everybody's on vacation, you try to get it into this weekend or next weekend. Either one is fairly decent. Last weekend, everybody's on vacation, getting kids to school. This weekend, of course, everybody's off on vacation, barbecuing and skiing and boating, which, by the way, I will not be here on Thursday and Friday. Wednesday is my last day before I go on vacation. And I will be back Tuesday, I think, or Wednesday next week. I can't even remember. Anyway, going to be gone for a few days, but it is the time that people, the technical term, actually, it's on Wikipedia, called the document dump. And if you're an attorney, you try to hold off all week and dump a bunch of stuff Friday afternoon and kind of make life tough on the opponent because they've got to go through all of it, over the weekend instead of during the week. And it's a way of extending the middle finger to your opponent, hiding information you don't want out there. Netflix dumped very late on Friday, a 10Q that basically shows they have $10 billion worth of off-balance sheet items. And it's not fraud like Enron where there's nothing exists. It does tell you exactly why I was always afraid of Netflix up to this point, and that is that they have an incredibly loose accounting standard for their business. Before they started doing their own content, they were getting contracts on movies to show, and they would write it off like the thing would be viewed the same way it was, for the first couple of months of a recent movie for the next 3 years. Well, we know that when it comes on, 90% of the people that it will ever watch it will probably watch it in the first 60 days or 90 days. It's like that in a lot of things. In computers, 80% of the software someone will buy is within the first 60 days or 90 days when they buy the computer. So there's a lot of push. That's why there's so much bloatware on your machine. They want to get to you when your machine is new and when they have a chance of actually selling it to you, and why there is so much bloatware on at least PCs. But what it does show along in the 10Q is the business plan is dramatically changing for Netflix. Netflix used to be a company that distributed other people's content. And as life goes along, they are much more getting into the business of creating their own content, because guess what? They know that the competition's out there, and the competition can buy content just as well as they can. So there is no separation. So they've started to work on their own stuff. And a couple of the first efforts have been really good. House of Cards, Orange is the New Black. But at the same time, their accounting shows something vastly different for the ones that do not hit. Those are the ones like Marco Polo, which apparently nobody watched on Netflix, and a few others that have been big expenses with very little viewership. Now, you pay the same amount for Netflix whether you watch it or not. So I don't know if it really hurts Netflix in the beginning, but it certainly doesn't add to the value. And as more and more companies come along, like HBO, Showtime, I can assume others like Crackle and some of the other systems that are really firing up for streaming. The question is it going to be, are you going to lock into the $8 or $9? Will Netflix have to raise prices? And at least over the weekend in this 10Q and some of the other things that the CEO has been talking about, they are talking about maybe being a lot more like HBO at $15 a month, spending a lot less on other people's stuff and working very hard on producing their own. Of course, their biggest competition right now is Amazon. Very interestingly, if you value Netflix and Amazon the same way, Amazon should be a ton more expensive or higher priced for its stock price now than Netflix. And so one is vastly different than the other. Either Netflix is way too expensive or Amazon is way too cheap. I'll do an Andy Heckism. Is that what it is? An Andy Heckism. And we'll look at that. But very interesting out here. We've got Wayne, who wants to talk about VIXs. And when we come back, we'll also talk about no mayo. Got people out there rattling some sabers out here for Bank of America. And they got a lot of things to say, and they are not nice. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, and the market's stuck 1975 and a half, 2.25 billion shares. My guess is that we're in this upper trading range of 1970 to 1990, and we will be probably throughout this week. We might see Friday or Wednesday, probably starting Wednesday through Friday, a little bit of short covering. And I think we're going to see it in a lot of things. Ex-gold, it seems to me, is the one thing that doesn't look like there's going to be a tremendous amount of short covering. Looks kind of flat into the weekend for me. Of course, what action we had today in oil, we are long an oil company in the daily newsletter. I think had a lot of people think probably that today the thing was going to be eviscerated, but it's up another 2% today. So we've got some good action in it. We're looking at some other things too, but I think a lot of money is going to be sitting on my hands for the next couple of weeks as volatility continues to come out of the marketplace, and I am in inexpensive equities. Hang on. Wow. Now, that was some powerful, powerful sneezes there. I don't get them very often. Anyway, we've got a Andy Heckism. Yeah, that's what I said, Andy Heckism. Anyway, so Mr. Mayo, who's a big shot on Wall Street, is going after the Bank of America's CEO because basically he wants to set up a deal where he's also the chairman and the CEO, and he runs the place with an iron fist because it hadn't been doing that well. Anyway, Mr. Mayo has put out a laundry list of bad things that are happening, and kind of interesting to see that they're actually going after a CEO as much as they are this one. But you can read all the stuff online, but I've got them posted out here. But, he's got someone, there's no scorecard for compensation, inconsistent financial metrics in the CEO letter and presentations. In fact, the bank has seen 4 CEOs, 4 chief risk officers, and 4 heads of wealth management in just 8 years, the lack of self-criticism. There's a ton of stuff. But I don't know. It's kind of interesting. We'll see what happens. My guess that vote is coming up shortly for Bank of America. And if he probably loses that, my guess is he also loses his CEO position, which is the reason he was trying to get the chairmanship at the same time to ward off people coming after him. We also have news from Apple, or around Apple, and it continues kind of proving my point that a lot of these companies don't want any of these security companies anywhere near them, because it seems like everything eventually leaks out. Palo Alto Networks was out over the weekend and unearthed a scheme that has resulted in the largest known Apple accounts thefts caused by malware. In all, some 225,000 valid Apple accounts with credit cards were compromised. The theft is executed via variants of the KeyRaider iOS malware, which targets jailbroken iOS devices, which are basically Apple smartphones. Now, if you don't understand what that means, if you jailbreak a phone, you are able to go put your own software on it. And a lot of the phones that are stolen here in the United States or stolen in Europe eventually make their way to China. And since this works incredibly well with jailbroken phones for the most part, although it will work with other phones, most of these have been on these stolen phones. So a lot of people do not care so much. But Apple's cultivated a idea or belief that their system is basically not very easily hackable. The truth of the matter is it's more like the Indians and the Pilgrims showing up, and of course the Indians have no natural ability to ward off all the wonderful germs that we brought over on the Mayflower. And that's kind of Apple in a nutshell. They've got a good stonewall defense, but once you get through that, it becomes fairly incredibly easy to start doing things with their phones once you've made it through the outer wall. People that are used to always having problems tend to be a lot more resilient. Just like somebody that's been sick before and has a little bit of antibodies, they know that, that they can get sick at any time. Other countries have been affected also. But again, we've talked about FireEye, which has been kind of the company that's had its bullseye on its back, because companies don't like the fact that they have to alert the FBI once they know about something illegal happening. A lot of these companies, before these third-party companies have got in, would just ignore the problem and tell everybody to go away. Well, you can't really fire people on the opposite side. And once you get into telling another company they can't tell the FBI that a law was broken, you get into some big legal problems. And that's why these third-party companies can't shut up about it. They actually have to talk about it. And it eventually works its way out into the news. But probably the weakest part of all of these companies that we talk about in cybersecurity is that if you've got some sins, if you didn't do the right thing and you get hacked, that will be it. We've seen several, probably 10 different CEOs end up losing their jobs, but a ton of others haven't, that have been able to keep it quiet. And to them, making the numbers by not paying some big money to cybersecurity firms has been the rule, not the exception out here. It is a mad market, but a little of the steam is starting to come off these markets, and I suspect a little bit of the volatility too. I think from what I've watched over the weekend and the action of the markets out here, we can send you to see a market that's probably just stuck in this upper trading range for a while. Again, we're off 16 points on the S&P cash, 2.3 billion shares, so volume is now starting to wane and probably will be into Friday, which is one of the reasons why I decided to go ahead and vamoose Thursday and Friday into a light weekend and come back, hopefully rested and revived. A couple of other stocks I wanted to get to. Of course, the huge move in oil when it was down this morning probably caught a lot of people by surprise, but just anything that anybody is that monstrously short right now, it has the capability to rip their faces off with a short squeeze. And that does not mean just commodities, but there are a lot of stocks that have 40, 50, 60% short interest right now, and they are incredibly dangerous. I think we're going to see a few of these pop off before we go into Friday. Now, to the most notable movers out here, let's get into those. TWTR. Okay, I'm just checking my email real quick. One of my thoughts on NVIDIA, which this is from Friday, which we'll get into a second. Just wanted to get to a few of these others first. Twitter has started to bounce up off the bottom. It got to $1 up to 28.49, a nice day today. Of course, the news pushing this one a little higher today is that they've got some kind of announcement before we go into the 3-day weekend. When is that? The 3rd? So it's this, I think it's this Thursday. And a lot of people think it's that they found their CEO, and probably why we've moved off that 2101 level fairly aggressively from last Monday and are up fairly significantly. What is that? 30%, 25% in 1 week in Twitter. My guess is this thing's going to be meander back around to this $33 level where it gapped down on the last earnings and had gone down fairly succinctly. But that's probably where resistance is going to be. That's the 729. So what is that? July 29th at 93. Let's call it 93 million shares on that gap down. And that's probably where you're going to have fairly significant resistance. So actually not too bad, another 12% higher in this, but look for this thing to kind of move up into that announcement, I think, on Thursday. What else do we have out here? SanDisk, a lot of rumors. Probably a lot of these are fake rumors or made up by people that are long trying to run shorts out. This is famous for this time of year when markets get very light. And I don't think there's anything else more you can say about it. They are pumping SanDisk, and it was up 4.5%. There is a little gap at about $58 and another one at about $61. Not a lot of volume in those, so I don't know if they're really predictive. What you probably should be looking at a great deal more is the retracement levels on these. Now, in this one, the one I'm really thinking that would be significant, we're fairly close to, but there is a great confluence level between $60.76 and $61.53. And I suspect that's probably where this is going to meet some fairly significant resistance. But, you know, it's another $5 higher. It could be fairly significant in SanDisk. I don't think their business is that good, but I do think there are a ton of people short this thing. And like oil today, will probably be on the wrong side of that trade for a little while. PSX. Mr. Buffett has gotten big time into Phillips 66, and that hit the news today. Got a little kind of doji out here today. Again, a lot of his trades lately have not been going that well, but you can see that he got back in. See, what did he get? 58 million shares. He's kind of in that for a while. And that may be a little bit of one of the reasons why oil is getting up off the ground. A lot of people have to short cover when somebody like a whale gets in on one of these, that gets in on many of these, and then everybody thinks that maybe the reason these are going up is because of oil's going up, so they buy oil. And the question is, when are we going to see these things actually tell us the truth of what's going on in the oil sector? And I suspect it's probably going to be a few more weeks before we find out. BBD. Brazil names are underperforming today. This one gapped down. This is the Bank of Brazil. It looks like it's headed back down to its low at $6.06. The good news is the volume is lighter today. You needed 19 million shares to wipe out the August 24th low. Today we've got about 14 million shares. So it's going to be lighter. I don't know how much lighter, but for a lot of these banking third world bankers, they're probably going to have a lot of loans that go south. And I'm not real bullish on especially third world banks out here. Another stock that is that's got a giant sucking sound.
There will be a giant sucking sound.
Down 5% is NTs, which is another one of these Chinese company. VIPs, which we've talked about at length, at being maybe as close to a total fraud if you believe the shorts that are on CNBC talking about this company. But even if you just compare the paperwork that they file in China to the United States and see that there's a tenfold difference between the assets they show in China and the ones that they show here in the United States, and the fact that they lied about how many actual locations they have open. That was VIPs anyway. On this one, everybody's just cautious, and I think this is certainly one of those stocks where if you get any opportunity to get out, I think you should take it probably. I'm not a fan of Chinese stocks. Never have been, never will be, unless something drastically changes out there. I had some discussion in the den about Alibaba. And again, I don't know if anything's going to change any of these Chinese stocks. Sell when you can. Certainly one of the base volume is not huge, but I don't think you actually have a lot when you buy a Chinese stock. But that's I haven't changed my tune on that. I said I disliked them from the very beginning. And, I basically told you thusly.
I informed you thusly.
Cool. I informed you thusly. WLL, another one out here moving well. Up about 13% today. Of course, a big move on crude. And this is one of the ones that just, if you go back a little farther, just see how bad this one has been destroyed over time. This is a $92 stock. So to see a 13% move in it does not surprise me off the bottom. The only thing that surprises me is, I wouldn't even say surprise, but that bothers me is this thing didn't make a double bottom that I could have bought. Because I knew this is one of these stocks that has super high short interest. You're going to see wicked moves off these bottoms, and especially this week as volume continues to collapse, it will be very tough to see these stocks go lower. Not only should you sell when you can, you should cover. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we're talking about security stocks. Just wanted to take a quick look at them. It's off 2 3/4% today on Palo Alto Networks, 3.5% on FireEye. Anytime these guys come out and start blabbing about what they found, they seem to be rather weak. Even CyberArk is off 2 3/4%. Anyway, more pin action happening off of Mr. Buffett's foray into the energy space. Pretty big move for ConocoPhillips out here today. It was up, where do I have it? I don't have the percentage right here. Nice pop out here. Energy kind of coming off. My guess is that ConocoPhillips wants to come back up to where this thing started coming back down, which is about the $51 level. So you got maybe another $2 in this trade. Again, like I said, volume's going to come off the next couple of days. A lot of people are short these energy names, and my guess is that they will not go into the 3-day weekend, or a great deal of them won't. And you can see these things drift up, 50, 75 cents, maybe back a quarter, up 50 cents, kind of a little back and forth as we go into the weekend. I'm not expecting a lot of down action. When we look at the S&Ps out here, we're kind of a little under that 1970 level, but we were under it earlier today, and it bounced. It kind of looks to me like a lot of people, as soon as we get down to these levels, figure that maybe they can get out of a few of these shorts when the market's down a little bit and pops us right back into that upper range. 2.4 billion shares, so volume is much lighter. And if you would say this thing is moving to the downside, a little bit more. More important to me is how the dollar is moving. It's down 18 cents today. We did go up to resistance, which is 96.30. Not a lot of movement off that move. My guess is that we're going to at least break the 96.30 level on the dollar index. And when we do, either it's going to take off or fail, and it's probably going to take us a great deal of what's happening. I thought maybe we'd get it today. Maybe we'll get it tomorrow. Maybe this market's just going to calm down and we're not going to get it until next week. We'll have to see. But again, it seems to me like, a tenth of a percent or even a fifth of a percent in the dollar index is pretty low volatility for what we've seen for a while. GLD, pretty flat also, which is very interesting. That tells me that, we don't have a lot of energy up. We don't have a lot of energy down. And that may be a broader call all the way into Friday. But we'll have to see. IBB pretty much hit its target, which, if we can pop this up real quick. I was looking for 356. That would have been the big retracement, the 618 on it. It pretty much got up within $2 of that. 354 today. And your target on the 618 would have been 356. I know I had a couple of people that had emailed me that said that they had bought out of the money calls on this to the upside. I think they would have been in the money, at least some part this morning. But that's, you get pretty close to the 618 after a move off the top like the IBB has had. I think you probably have to think that there's going to be resistance and a tough road to hoe to push that much higher. We're down a little bit. Is it anything significant? I don't think so. Not so far. We'll have to see how today closes. I suspect we're going to close down like 10 or 15 points on the S&P cash, but back above that 1970 level. We'll have to see how today pulls out. As I said, you can cover when you can. You can sell when you can. And, of course, you can tune in here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.